Hello, everybody, and welcome to another episode of Virtual Legality. I'm your host, Richard Hoeg, managing member of the Hoeg Law Business Law Firm of Northville, Michigan. And today we're talking a little bit about business and law because our good friends in the video game industry have once again decided that we should talk about acquisitions. Now, folks online have already asked me a number of questions about this particular story we're going to talk about today, Sony's potential acquisition of Kadokawa, and I apologize in advance if I mistake that pronunciation. It is a Japanese name, so it undoubtedly has a correct pronunciation, but I don't know precisely what it is. So we're going to talk about that today because there are a lot of things, a lot of factors involved with this particular discussion that people have a great deal of interest in. So with that said, let's talk about the initial report. This is Reuters from a couple of days ago. Sony is in talks to buy media powerhouse behind Elden Ring. And you saw from the thumbnail to this video that I asked whether Sony would become the Elden Lord, a character or concept from the game Elden Ring. But really, Elden Ring is only the start of our discussion here today. So, as described by Reuters, New York, Tokyo, November 19th, two sources familiar with the matter say Sony is in talks to acquire Kadokawa, the Japanese media powerhouse behind the Elden Ring game. If successful, a deal could be signed in the coming weeks. Now, I wanted to point out at the start of our conversation here that, as you know, if you've been in virtual legality or if you've just followed these stories elsewhere, signing a deal does not mean that the company changes hands at that moment in time. You sign a deal, and there are a number of conditions that have to be met, including regulatory approvals and things that we saw with respect to Microsoft's purchase of Activision and in other contexts as well. And so we are at the point in time right now where this is just a rumor as presented by Reuters. We'll see it was followed up on and confirmed in some respects by Kadokawa in just a minute. But where we are in the time frame is that these two parties are potentially talking about an acquisition. They would then have to sign a document that says we're going to get more definitive documents together. They would sign that document, and then the closing of the transaction, Kadokawa becoming Sony's company, wouldn't happen for some period of time thereafter. Probably not as long as it took for Activision to become a part of Microsoft, because I wouldn't anticipate as much regulatory concerns here, but that's a part of this conversation as well. Either way, we are a couple steps removed from even having this actually happen, but people are interested because Elden Ring, Demon's Souls, Dark Souls, the FromSoftware library of games becoming owned by Sony raises concerns for certain people that love those games that don't want them to be held exclusive by Sony, just as the Call of Duty question became one for Microsoft, making it potentially exclusive, as well as Bethesda games like Starfield, potentially like Indiana Jones, though we know that's coming to PlayStation now. And so this is an important discussion to be had. And though a number of folks think that I defended Xbox from the FTC and the CMA in the UK, specifically because I'm an Xbox fan, I would reiterate in this context that I'm a fan of gaming more than I'm a fan of hardware manufacturers or any other company within gaming. And so if the FTC or the DOJ or any other international body were to come down on this transaction, I would have my own concerns with that regarding whether or not that was a just use of their authority and power, just like I did with respect to Microsoft and Activision Blizzard. So with that said, I want to talk a little bit more about this deal. Sony already has a 2% stake in Kadokawa, Reuters notes here. That's important when we're going to talk about the price of this transaction. A lot of folks have asked me about the price, both because of a tweet that I put out into the world, which we'll talk about as part of this video, and because it's an important question for Sony and their ability to pay for the transaction in general. It's important to note here when we do the math a little bit later on, and as always, I warn people of lawyer math because lawyers are known for their word crafting and not their mathematical prowess, that we will get into in just a minute. Sony would only be purchasing 98% of the company because they don't have to buy the 2% that they already hold. Continuing on, I wanted to mention that I am sympathetic to Reuters having to come up with different ways to talk about these companies in many, many articles that they put out there. Sony here is described as the inventor of the Walkman, which I thought was an interesting way to describe Sony. Undoubtedly true, but perhaps not the most useful here. Maybe the hardware manufacturer, the PlayStation, would be better. Sony's focus, they note, includes anime, which I know is a particular concern for a number of people with this particular transaction because Kadokawa controls the distribution and creation of a lot of anime themselves. Sony already has an interest in Crunchyroll and some other aspects of the anime industry. And so that is one area where folks have brought to my attention that there might be a concern with respect to monopolization and antitrust laws as well. I don't think that will wind up being an issue, but we'll talk about that as part of this video as well. I also wanted to note here one other thing that Reuters notes. Sony, which has a market value of about $114 billion, in January scrapped the $10 billion merger of its Indian arm with Z Entertainment Enterprises. And I wound up talking about this online to a number of folks because they asked me why I thought this potential transaction would be a problem for Sony's pocketbook. And I noted that this transaction was scuttled. And they said it was for conditions that were not met. And I wanted to point out to people that Sony is run by people, individuals. Every business is. Microsoft, Activision, Sony, Kadokawa. And when you get to the end state where you're going to hand over your money for that company or for those assets, you can reevaluate whether or not it's a good idea. And this particular transaction with Z Entertainment Enterprises wound up being a bit of a legal fight after the fact because Sony backed out of the transaction in its entirety. And I'm not saying that specifically because they didn't want to spend the money at that moment in time, but there was a legal fight about it because individuals, human beings, can act on pretextual reasons for getting out of a transaction. And ultimately, this deal died for any number of reasons, not the least of which is because Sony just didn't want to do it at the end of the day. And that may or may not be a function of how much money they would have had to spend. Similarly, as Reuters notes here, Kadokawa's business has been buffeted in recent years. They say in June it was hit by a cyber attack that lowered the price of the shares of Kadokawa. And then 2 years ago, Sugihiko Kadokawa, the son of the company's founder, resigned as chairman after he was indicted on bribery charges related to the Tokyo Olympics. And you can go look up the Wikipedia article and all that for this particular item. But what's worth noting here is much like Activision and much like a lot of transactions you see out there in the world, this is a circumstance where this particular company has an intrinsic value in making goods and services and selling them out into the market. And then that value is decreased to some extent in the public stock market because of circumstances that are likely black swan or individual events that are unlikely to reoccur. So like Activision and the lawsuits in California about harassment and unequal pay and things like that, that lowered the price of Activision to a place where Microsoft was comfortable making that bid, this does appear to be a set of circumstances where we would expect somebody to come in and say, well, maybe you are undervalued in the market now because you've had certain issues with your company that maybe we can fix, maybe we can't, but that the stock market is not valuing you at the level that it should. And so we see a set of circumstances as described here, which is only referenced by, I believe it's sources familiar with the matter, but it makes sense from the story that Reuters has put out here. And there's no reason to disbelieve it, especially once Kadokawa reveals that they have received a letter of intent from Sony. Now, like I said, that's really only step one. It's even before step one of a transaction between these companies. But I wanted to talk to you all a little bit about what a letter of intent is, because you call up a company, if you're Sony, and you say, hey, are you interested in selling? And they say, probably not, because we're running our company right now. And Sony says, well, what about for this price or for this deal? Would you at least be interested in entertaining that? And if they can get you across the line of saying, yes, we would at least entertain that, then Sony can move forward with its lawyers and say, all right, put together a letter of intent for us and put together it based on these transaction terms that we have agreed to, or we think we can get Kadokawa to agree to in the medium to long term. And if you haven't seen a letter of intent before, I use forms that you can find online so that I don't have to redact my own client information and potentially miss something, because there is attorney-client privilege in all the transactions I conduct and any other lawyer conducts. But a letter of intent is basically a primarily non-binding type of document that says, this is the price tag for these goods, whether it's equity in the company, whether it's the assets of the company, however the structure might be. It sets forth the price and what other documents that we might need. This is how long your founders have to stay with us. This is what we would pay to your current option holders in order to clean the books of this particular company. All sorts of things that come up with legalese. But it's important to note, before we get into talking about the price of this company and other aspects of where that price might be shifting, that the lawyers basically only come into full play with the drafting of this document. And it would usually be with a set of bullets or a telephone conversation that says, this is the purchase price that we are willing to offer to this other business. These are the structural terms that you need to know to incorporate into the letter of intent. And that the lawyers, like myself, do not actually set the value of the company. That's the business people on either side of the transaction deciding on what this thing should look like, what offer they are willing to make. Then the lawyers lawyer it up with some legalese so that it's binding in the places that it needs to be binding and non-binding in the places where it shouldn't be, and move forward with that. I, in other words, am a lawyer. I am not the financial advisor. I'm not the financial analyst. A lot of people get paid a lot of money to go out there and value companies and figure out what the price might be that we could purchase a company or sell if we're on the other side of that transaction in order to make the most money for their shareholders or otherwise meet their fiduciary duties. And so the lawyer doesn't usually engage in a lot of lawyer math here. They're usually just documenting the transaction as best as they are able to. And you see these little notes to draft here. This is the kind of precedent that I would work off of when putting together a letter of intent. Not necessarily this long, not necessarily with this many terms. A lot of these could come out depending on what the transaction actually was. But this is when the lawyers get involved and not before. But Kadokawa says they've received a letter of intent from Sony at this point in time. It undoubtedly has a purchase price or a purchase range if Sony hasn't done all of the due diligence that it needs to yet to figure out what price it's willing to pay. And then the letter of intent can be signed once the board of directors of the company agrees that this documentation should move forward. At that point, Sony then enlists its lawyers to take this letter of intent, these bullet points of the deal, and then to draft a stock purchase agreement or draft an asset purchase agreement, draft a transition agreement, draft a whole host of other documents that might be necessary to get all of this set up for closing. And then that point in time, what Reuters describes as in a couple of weeks, is when the parties can agree to a set of deal documents, even though the closing is probably going to be months to a year out from that point. So we're still a bit far away, but Kadokawa, as a public company in Japan, wants to tell its shareholders, wants to tell its investors that those articles you've read about this particular issue are true insofar as Sony's made an offer. But they also say here that the company has received that letter of intent, but no decision has been made at this time. And this is important, right? As a public company, you are supposed to be transparent with all material information about the state of the company because the investors need to know what's going on inside the company in order to best be able to buy or sell shares on the open market. Here, Kadokawa says, we haven't moved forward yet, and we'll tell you if there's more to be said about this in the future. So it's still a few steps away, which leads to the other question here, which is to say, how did this information get to Reuters? Right? We'll see in just a minute that the price of Kadokawa's stock in the open market jumps when this news gets out the door. And that's not unexpected because every company that you're going to purchase on a public market is going to have to be purchased at some premium to the price that it is currently sold at on that market. So because of that fact, even though we don't know the price right this second, we know that Sony, in order to even get through the door, would have to offer some amount higher than the shares are currently trading at. And so, generally speaking, Sony doesn't have a great deal of incentive to go out the door with the information that they're thinking about buying this company. And they don't want to get into either a situation where the price of the shares goes beyond a place where they would be comfortable buying it or that investors would be comfortable selling it to Sony, even though the price might have been agreed to at the start. And they also don't want to get into a bidding war, right? Part of the story with this particular company, Kadokawa, is that Sony's a major investor. Tencent's a major investor, other huge companies with a lot of money, a lot of potential cash on hand to make a transaction like this would be interested potentially in buying the company, increasing their investment in the company if they knew it was for sale, right? So in general, buyers don't want the news to go out the door that the company is potentially shopping itself around because that would increase the price again on the Sony side. So we can probably discount, and this is all supposition on our part, we don't have eyes or ears in the room, we can probably discount that Sony is the leaker behind this particular story because it doesn't make a lot of sense for them to be leaking this to Reuters. On the other hand, Kadokawa and its management does get the benefit of that stock bump, especially if, as was the case in the Reuters article and its notes, their stock price has been somewhat artificially decreased for a period of time to justify their continued management of the company and or to stave off what they would view as a different kind of hostile bidder. And I've seen online certain folks guessing or kind of proposing that a different hostile bidder could be at issue here, and that Kadokawa was effectively using this story as a kind of white knight defender of the company from somebody that they really didn't want to own the company. And that's all possible. But suffice it to say, it seems more likely that Kadokawa is leaking this, someone inside Kadokawa is leaking this, because it doesn't make a ton of sense for Sony to. The other aspect of this, as I just mentioned, is that lawyers are involved here. It really doesn't make sense for the lawyers to leak information like this. Lawyers, particularly transaction lawyers, have a lot of business deals, a lot of financial understanding that is private to them, that is privileged information between the lawyers and the companies, and that they could lose their license and their ability to practice law if they were to leak it in a fashion like this to Reuters. So I really don't think the lawyers are likely to be the culprits here, but of course they would have the information as well. Now, with that all said, I do want to talk a little bit about the price situation here, because a lot of folks have asked, and I am responsible for at least some of that, because when I first saw this news, when it was leaked a couple of days ago, the very first thing I said was, honestly, I'd be more concerned about Sony accidentally bankrupting themselves than monopolizing games and anime, which is what I saw being discussed online. I just don't see a simple way for them to pay for this. And this was somewhat flippantly made as a tweet, as I often do on Twitter, because I see this bit of news and then I give my initial impression of these things. And a lot of people got mad at me for even suggesting that this could be an issue. And this was sent around to various places and said, Xbox fanboy lawyer cries foul when Sony does acquisitions, but attacked FTC for a $100 billion Microsoft acquisition that led to Phil erasing red lines, which is a whole lot of video game discussion points baked in there. But one of the things that I want to say to this kind of concept is that I'm not crying foul on this transaction. I don't want to see Sony harmed. I want to see Sony continue to be out there in gaming, making hardware, being a participant in this industry that I love so much. And I want to make sure that they don't accidentally get sucked into a quote unquote shooting war with cash money that they don't have. My initial reaction to this story was, I don't think Sony has that much money to make a transaction like this. And that was really the impetus behind my initial statement. And as for attacking the FTC, I suggested, as those of you that have been in virtual legality know, that the FTC did not have a strong case against the Microsoft Activision Blizzard transaction. And I would say that whether it was Sony buying them or Nintendo buying them, as well as Microsoft. So this is really not a case where I am attacking one party or the other. I just wondered where the money would come from. And you've probably heard me say in the past on places like the Bitcast, which you can find me on at 11 a.m. on Sundays, if you are so interested, that this is the kind of story that we should be talking about with respect to what antitrust means and what gaming consolidation means in these corners. But the reason I said that was because Sony really doesn't have a lot of money or cash on hand. And I do, again, want to disclaim, just a lawyer here, just a humble country lawyer, not a financial analyst. And a lot of these websites that I was looking to for this information, particularly when we get to Kadokawa, are not terribly trustworthy. They have a lot of numbers that don't make sense. They appear to be AI grabs of financial reports that maybe don't understand exactly what they're seeing, don't tell you what denomination it's in, whether it's yen or US dollars, whether it applies to quarterly or monthly or annual financial statements. So I did my best with what I could grab on these questions. But again, don't listen to lawyer math in general. Don't listen to online sources for the financial statements if you don't have to. And really the conversation I want to have around what the price of this deal might be and whether or not Sony could pay for it is really around how these things get determined and the kind of concepts and themes around the math that goes into a question like this more than the numbers themselves. So please don't take this video as definitive evidence that price will be X, price will be Y. Sony can pay for it, Sony can't pay for it, but more an understanding of how these decisions get made and how financial analysts work. So one of the things I wanted to point out is that Sony right now, in its most recent report, has about $14.25 billion available. Now, if you say, Rick, that's not a ton of money, but also you just said $1 billion. In both cases, you're right. It's not a ton of money for operating a multi-$100 billion corporation. You want to have enough money to make sure you can effectively pay for rainy days and have enough cash flow to move around employees or whatever else you need to do in your corporation, but it's not nothing either, right? And so we need to determine what the value of Kadokawa actually is. And again, like I said, this was a little bit difficult to track down. A lot of these numbers don't make sense, but this appears to be a fairly good rendition of the value of Kadokawa online. And this suggests that it's $3.59 billion right this moment. But this itself has a caveat, which is to say that it's, yes, 3.6 billion right now, but right before the rumors, it's at about 2.64 billion. So 2.64 billion is probably the more useful number here because this already incorporates the value of a potential Sony acquisition and is not reflective of what the market thought the company was worth before those Sony rumors came out. So Sony has $15 billion. The market valuation of this company is about 2.64 billion. No big deal, right, Rick? Well, like I said earlier in this video, you do have to pay a premium on these shares. And why do you have to do that? Because right now, these shares could be sold in the open market for that amount of money without giving up control of the company and for no other reason than I just want to sell my shares. So you get a premium if you're a stockholder in a company that's being acquired because they have to drive basically all the shareholders to adopt this transaction, even if they get board approval. And those shareholders are going to want a little bit more than they would otherwise get because this acquirer is going to be taking control of the company when it wasn't in that company's sole control in a public marketplace. So we call that a control premium, but it's very normal. In order to get this deal done, you have to pay more than it would be sold for in the open market. That's not based on this higher number here. It's probably based on the lower number. We don't know for sure because we don't have the LOI in front of us and none of this transaction has been finalized at this point in time. But at 2.64 billion, we're probably looking at a place where Sony can pay for this, which brings me back to my original tweet, which is not a concern that Sony will bankrupt itself specifically by buying Kadokawa, but a concern that Sony gets stuck in an acquisition war with a company that has a lot more cash on hand. So Microsoft, as we will see as part of this video in just a minute, has hundreds of millions of dollars potentially available for it. Right this second, it has a little bit less than that because it just paid for Activision Blizzard, but it has hundreds of millions of dollars in general to potentially spend on transactions should it choose to do so. The answer to that for Sony should not be to just go into an acquisition war in the gaming industry because it's a sure loser and realistically it can result in overspending by a company and putting itself in a position where it can't sustain itself, which is not what I want. I want Sony to succeed just as much as I want Microsoft to succeed and just as much as I want Nintendo to succeed. But I realize that these companies are not run by aliens, not run by all-seeing robots or gods. They're run by people. And just like a home budget can be overextended, so too can a business budget. And I don't want to see that happen. So here we've got a company that may be worth about $2.5 billion in the open market. We've talked about premium. Sony has about $15 billion available. Let's talk about how these deal numbers get made. So this is a private company document. Again, I am a mergers and acquisitions lawyer. I've worked in venture capital. I've worked with entrepreneurs and small businesses for my entire career, which is coming up on 20 years really, really soon now. And this is the way smaller businesses, private businesses kind of get evaluated, right? So in this particular case, this is about EBITDA multiples. EBITDA is earnings of a company, a kind of net income notion, but before it pays for interest, taxes, depreciation, and amortization. And if you don't know what all those words mean, that's okay. The basics of this is it's a way of establishing what your profitability, what the value of the company is that doesn't take into account how it's structured financially, right? So interest and taxes, depreciation, amortization are all ways that you kind of handle your tax reporting. And you can have different decisions that you can make when you're running a company that can result in different emphases on those particular categories. EBITDA is basically the answer to that, saying we just want to know about your earnings realistically as close as we can get it to what you are making and then selling out into the marketplace. And then because that's a fairly realistic way of looking at what this company is actually worth, a lot of people, a lot of financial analysts, a lot of companies go out there with the notion that we're going to take this EBITDA number and we're going to pay you a multiple of that. And that's going to be the value of the company on the whole, which is representative of the cash flows that will come into the company over the course of X amount of years. Now, in this particular case, this particular table suggests that things like software development, which is arguably what this company, Kadokawa, is closest to in this particular context, might receive a multiple of its EBITDA of about 11.9x, which is a ludicrous number. This is not accurate. This is only for the first half of 2024. And the reason these tables and web materials are not overly accurate is because, as I said, almost all of this information of private transactions is privileged between attorneys, financial professionals, and the companies at issue. So companies like this one, this is actually First Page Sage, there's others like PitchBook that go out there and try to collate this information, are basically dependent on voluntary participation in their surveys and whatnot in order to come up with what people are spending to buy certain companies. But I also want to point out that first half of 2024 is not going to lead to a lot of deals, and it's going to get skewed results like the ones we see across this table. A far more normalized number here is software development, $10 to $75 million, as you'll know, a lot lower than what we're talking about here, at about a 3.4x to EBITDA. But again, this is only back of the envelope stuff. I'm not a financial analyst. Financial analysts get paid lots and lots of money to do this over the course of weeks, if not months, to come up with a number that they think something is worth. But we can talk about the way that this is arrived at. And so we've got a multiple of EBITDA concept. So we're going to need to know what Kadokawa's EBITDA is. So if we look at various internet resources, this is the PitchBook resource that I talked about earlier. We see a reference to a trailing 12-month EBITDA of 169,229, or what would be in millions for this particular period. And we can see that that's a number that makes a certain amount of sense for the type of company we're looking at. If we look at Yahoo Finance, we see 28.09 billion. We know that just by order of magnitude, that must be in yen and not dollars. And so we can do a little bit more back of the envelope math based on that to come up with what is that in US dollars? Well, it's about 180 million US dollars. Right? Okay, well, that's in the same range as what we saw from PitchBook. So even though they aren't identical, we can use that and say, well, okay, let's take that. We'll multiply it by 4 because this is a quarterly number, at least as proposed by Yahoo Finance in the earlier web page there. And we come up with a number of 728 some odd $1 million. And we can take that and we can start to use that to adjust our EBITDA multiples to come up with prices for this company. If we take the 3.4 multiple of that number for EBITDA again, we can see a value of 2.47 billion. Now we know that number is too low. Why? Because even at the number in the market before the surge from the Sony transaction, we had a number of 2.64 billion. So we have a good feeling that that 2.4 number is too low. And again, we're not using pure EBITDA in any event because we had to do this back of the envelope math. Then if we take 11.9 as our multiple, which again is ludicrously high, almost certainly not the case, we get a number at 8.66 billion. So we have a range now between, we'll call it 2.5 billion and 8.7 billion. And that seems like a reasonable range for this transaction price to take place in. All back of the envelope, nothing that you can go to your accountant or your financial advisor and say, Rick said it was worth this amount of money, because it's not the case, folks. But we have a number that we can at least entertain Sony paying for with its 14 billion or so cash on hand. Now, obviously, if I'm running Sony and the company demands 8.7 or $9 billion and I have 14 and change, I'm really unhappy trying to run my entire corporation with only $5 billion in cash as liquid assets to move around as needed for the next year of operation. So I probably wouldn't do that in that way. But the other aspect of this that we need to talk about is the notion of paying in cash, right? The Microsoft Activision deal, as we'll see in just a second, obviously very notable because it was paid for in cash. And cash, as they say, is king, because cash is immediately liquid. It is its value in your pocket. Now, that's obviously a little bit different with respect to inflation and things as we know it now in the marketplace and economics, but it's superior to stock, even in a public company, because stock in a public company fluctuates in value, could go up, could go down, largely outside of my control, and requires certain hoops to jump through in order to sell, in order to become value in my pocket. So in general, a company that is going to sell itself for cash is going to accept a lower total price than a company that's going to sell itself for something like cash and stock, or potentially other assets as well. In order to understand this, if I were to sell you a lamp right now, I might be willing to accept $100 from you because I know what $100 is worth. If you're going to pay me in gold bullion, I might have to make that $140 because I'm now essentially disadvantaged by the fact that I have to go figure out how to sell that gold bullion to someone else. Similarly, if you say you're going to pay me in bullion cubes, I might charge $180 because I have no idea how to move $180 in bullion cubes. And so it would take me that much time and effort and potentially loss in value of the bullion cubes in order to realize my gain from the transaction. So all cash deals are superior to kind of combination deals in the eyes of the seller. And we don't know what Sony's offering, but certainly Sony as a public company could be offering to buy this company, Kadokawa, with cash or cash and its own equity, issuances of its own stock. And that might be an acceptable answer to the question of whether or not Sony can, in fact, pay for something like this. Now, additional pricing factors are that, as I suggested, Microsoft has a lot more money here in Macro Trends. They suggest that Microsoft has about $80 billion or a little less than $80 billion. Again, a 45% decline year over year because they just bought Activision. They just spent that money. But we'll see that Microsoft probably will have more money by the time the year is up. Obviously, a lot more than $15 billion, however you slice it, which is to suggest that they're in the business of acquiring companies for cash. And Sony probably shouldn't be unless it wants to long-term lose on that particular score. Now, I do want to point out that Activision, which was purchased in January of 2022 for about $68.7 billion, was sold at about $51 billion just before that announcement was made. So if we look at the premium in that particular transaction, we can see that 68.7 over 51.8 means that Microsoft paid about a 32% premium over the market price of that particular company. If we were to apply that to what we know right now with respect to Kadokawa, we would see a price of about $3.5 billion. So that's probably more likely where we wind up on all of this because our EBITDA math is so kind of controlled by the various places we could see it. A lot of assumptions made even in those places. And so we've got a price of about $3.5 billion, but I'm not done with confounding factors just yet. If we look at what Kadokawa actually consists of, we can see another important data point here, which is to suggest that on October 29th, 2021, Kadokawa announced that it had formed a capital and business alliance with who? Tencent, which acquired a 6.86% stake in the conglomerate for 30 billion yen or $264 million. Now, taking all that as true, and again, Wikipedia, your mileage may vary on these things, but usually they get these kinds of data points correct. Taking all that as true, we know that Tencent spent $264 million on 6.86% of the company, which means we can establish what the value of the company is that Tencent bought in at in October of 2021, not so long ago. And that value is, doing a little back of the envelope math once again, about $3.8 billion. So now we have 3.5 billion as a reasonable number, 3.8 billion, and potentially companies like Tencent wanting even a little bit more premium because they were involved in a strategic transaction with this company, which presumably would not be as strategically beneficial to them if it were owned entirely by Sony. So we've got a range of about $3.5 to maybe $5 billion, or potentially more if Tencent goes out there and asks for more. We know that Sony has interacted with Tencent in these investment syndicates pretty well in the past, most notably in my eyes, in the case of their shared ownership of Epic Games. But we also don't know exactly how Tencent feels about its relationship with Kadokawa and or whether or not they would make a bid for themselves. Right? They just spent hundreds of millions of dollars not 4 years ago in order to invest their particular interest in this company. Would they be interested in blocking Sony? And this is part of the reason why understanding who leaked that information is going to be so important long term, because if Sony accidentally gets Tencent in a bidding war, Sony also can't afford to bid its cash money against Tencent, as those of you who follow the Chinese conglomerate know. So Sony has all sorts of things happening here. Kadokawa may or may not want to accept the deal from Sony, but its board of directors, just like every board of directors, has a fiduciary responsibility to go maximize the value of the company's shares over the short term. And so if they believe Tencent could be dragged into a bidding war on this, then that might be something that they would be inclined to pursue. So we are many, many steps removed from Sony owning FromSoft, owning Elden Ring, owning all these other things that you might be concerned about. But the fact that Kadokawa is admitting there's an LOI, the fact that it would seem more likely than not that they were the one, somebody inside Kadokawa, to leak the information to Reuters in the first place, is suggestive of a company that probably does want to move forward with new ownership. So I think that this is the kind of thing that we need to look at. I think this is the kind of thing that people are justifiably concerned about, but we are a few steps removed from Sony owning these particular assets. I also want to point out here that FromSoft is its own kind of ball of wax in this particular categorization, because while Sony owns 2% of Kadokawa, they already own 16% of FromSoft, with Tencent, again, that name, owning the other 14% and Kadokawa owning 70%. So yes, Sony would own FromSoft if they consummated this transaction to purchase Kadokawa, but Tencent would already also own 15% of FromSoft, and they would be essentially co-owners, even though Sony would be the majority holder in that company. Tencent would probably be more disinclined to make FromSoftware software an exclusive to the Sony PlayStation, but Sony being in control of the company would certainly have the bigger say. So that's all a part of this conversation and setting the price of this. I'm most inclined to say that price comes in at something like $5 billion, because we saw the 3.5, we saw the 3.8 that Tencent put forth, we saw the premiums paid on Activision. All those numbers lead to something like a $5 billion purchase price. I think Sony probably can pay for that. Again, based on my tweets before, I was concerned they didn't have enough cash. They actually had a little bit more cash than I thought they did. I thought they had $12 billion. The current information suggests they have about $14 billion. Either way, $5 billion, not an insubstantial amount to spend on a $14 billion cash pot, but I do think Sony could pay for this if they wanted to. I have my concerns that Kadokawa isn't playing both sides against the middle here in some respect or another, in terms of who they want to purchase them and how high they can get that price to be. Certainly, Sony could not engage in a bidding war on this company to any great degree, and that must be a concern of theirs moving forward. The other thing I wanted to talk with you all about was this notion about anime, right? So this is from an article, I think on comicbook.com, that suggests that this would be terrible for anime. It says Kadokawa had already gotten a lot of attention from anime fans in the last few years, following their announced effort to produce at least 40 new anime titles a year back in 2021. This has resulted in more franchises that have been successful for sure, with recent anime hits. The production giant has also recently acquired notable studios like Doga Kobo, which has gotten attention in the last couple of years with other anime titles, but that's just what makes it to the screen. The company reaches out far beyond that, and they describe it, et cetera, et cetera. Sony, for their part, already has this in turn with Aniplex, that is overseeing the releases of massive franchises and other releases from Aniplex's production studios, such as A1 Pictures and Cloverworks. Sony themselves has also revealed their plan to nurture new talent within the industry, and their Sony stake in Crunchyroll, one of the major streaming platforms for anime. After fully acquiring Funimation, with the merger completely taking effect this spring, Crunchyroll is now the exclusive home to many titles fans can't get elsewhere. While this has changed slightly with some of the more blockbuster franchises being shared around, like Dragon Ball Daima and Dan, I think, maybe pretty close on that pronunciation. Let me know in the comments. This fall, it's still the home to the majority of new anime releases each new seasonal wave. This could result in a more unified global release for major series, which in turn could be good for anime fans. But at the same time, it also means that another major publication with its own voice and franchises would fold under Sony, would be folded under Sony, I think is probably the better way to say that. There's no indication that they would just close these companies. But this is the major concern I saw in my direct messages, saw people ask me, which is that, okay, Sony can't be allowed to buy this company because they would take a monopoly control over anime, right? And one thing I wanted to point out, and I'll use the Department of Justice and Federal Trade Commission guidelines to show this, even though these are Japanese companies, is that it is entirely unclear whether quote unquote anime or manga or streaming anime distribution or what have you are relevant antitrust markets for purposes of analysis. So if we look at these Federal Trade Commission guidelines, and these are the new ones, these are the ones that have really not been vetted yet by the court system in the United States, and we've seen the Federal Trade Commission come up against certain issues with bringing cases before the courts on these particular assumptions. We saw that with respect to Activision. We saw that with respect to Facebook, and within the Federal Trade Commission is seemingly out of pocket on a lot of these notions right this second, that A significant increase in concentration in a highly concentrated market can indicate that a merger may substantially lessen competition. That's what we're concerned about in the law, depriving the public of the benefits of competition. But again, that relevant market is what's important. So we have to scroll all the way down to what is the most important thing in this particular analysis, because for whatever reason, they put it on page 40 or so. So what is a relevant market? If you've been in virtual legality for a little while, you already know this. But if you haven't, a relevant market is a definition that is somewhat vague and fuzzy. The Clayton Act protects competition in any line of commerce in any section of the country. And the Clayton Act is the one that we're talking about when we talk about mergers and acquisitions. The agency is engaged in a market definition inquiry in order to identify whether there is any line of commerce or section of the country in which the merger may substantially lessen competition or tend to create a monopoly. A relevant antitrust market is an area of effective competition comprising both product or service and geographic elements. The outer boundaries of a relevant product market are determined by the reasonable interchangeability of use or the cross-elasticity of demand between the product itself and substitutes for it. So the substitutes are important here, and this is why I don't think there is likely to be a particular difficulty with anime, right? When you think about anime or manga, these are genres within broader fields of television or movies or books, more than specifically something that we would need to be worried about not having adequate substitutes for on a broad level. So yes, you can protect markets. You don't really protect genres, right? If one studio wound up purchasing all the action movie creators in the world, we would not say that they had a monopoly on action movies necessarily, both because other studios could pop up to make action movies, other studios can pop up to make anime, but also because a genre is not its own market. It is infinitely substitutable for drama or comedy or horror or what have you. And similarly, anime is a specific way of making television shows or movies, but it does not strike me as a relevant antitrust market for this purpose. Now, that doesn't mean the Federal Trade Commission or the Department of Justice or anyone else couldn't move against a deal like this. We saw that with respect to the CMA and the FTC and Activision, but we also saw those agencies essentially have to back down after Microsoft presented a lot of information about why there were substitutes, why this was not a relevant market, and why in this particular case, Microsoft would agree to certain contractual rights to other people within the market that would eliminate all arguments against them. Now, might Sony have to make similar concessions in a similar circumstance? It's certainly possible, but I would doubt right this second in November of 2024 that the Federal Trade Commission would be willing to spend political capital on trying to ensure equal and competitive access to anime programs. That strikes me as unlikely. But a lot of the things the Federal Trade Commission has done of late strike me as unlikely. So it is not impossible. Still, this is the kind of thing where I think there are lots of substitutes for anime, lots of substitutes for manga, and it's unlikely that just Sony taking control of these particular aspects would result in federal regulatory problems. I also want to mention, I did see online a number of people saying, well, these are Japanese companies, the FTC would have no say. That's not how this works. You should probably recognize that by the fact that Australia, New Zealand, and the United Kingdom had to approve the Microsoft Activision deal. But in short, if you sell a product or service into a jurisdiction, that jurisdiction has a certain right to say exactly how you sell it, what the constitution of your company is. It has a right to control its sovereign jurisdiction. And so if Sony were to move forward with this, and the Federal Trade Commission or the Department of Justice wound up saying, hey, this might be an issue, they would 100% have the ability to say, we don't know that this deal should be allowed to go through. We don't know that we would recognize the combined company or allow its sales in exactly the way that Sony combined would see them be made. And so the FTC, the DOJ, the United States in general, but all sorts of other jurisdictions, 100% has the right to have a say in these various things. But I don't see it as likely that they would seek to block this particular transaction. Now, with that said, this has been Virtual Legality for today. If you like this video, if you enjoy these kinds of conversations, please do consider supporting the channel. I'm going to probably be doing more membership-only streams, more things of that nature of late. So please, if you're inclined at all, share memberships with people. Super chats are always appreciated. Player and Patreon links are in the description to this video if you want to support us through an outside platform. Otherwise, your likes, comments, participation in the chat, all of that is very much appreciated. We cannot do these kinds of videos without support from viewers and listeners like you. Okay, Does anybody have any questions or comments on what I just said? Let's see. It looks like we're going to be okay, which I'm going to take to mean that I was just entirely lucid and clear throughout all of these many conversations and many different points on this transaction. And I'm going to just take that as a big win for right now. But if you do have questions or comments on this video, please do mark them with an H colon, a Q colon, at Hoeg Law, anything along those lines. And I will try to grab them if I can and answer them if I have an answer for them. Otherwise, I'm probably going to just say goodbye for right now and see you on the next episode of Virtual Legality. So thanks to everyone. I do want to make sure that I capture any other comments that I might have missed. Let's see here. Goddamn Dan asks, will the CMA address limited anime streaming platforms like they did about cloud platforms during Microsoft and the Activision merger? Well, I think I answered this a little bit, but one thing I will always say about government regulatory agencies is there's a lot of good people at them making a lot of tough decisions, but I cannot read their minds. I do not know whether they will pursue an action against this particular transaction if it were to come into being, which again, we're a number of steps removed from that at this point in time. But certainly the CMA has proven to be one of the more activist bodies on questions like this one. So it's possible, but it does strike me that when you're in entertainment as it stands, it's already kind of difficult for these companies to really use their political capital. If you make it just Japanese anime, then it becomes even harder. I understand the points that people are raising about that, especially digital streaming kind of pipeline getting monopolized by someone like Sony on these cases. But I do think the government regulatory agencies are less likely than even video games to step in and try to block something on those grounds. The Lucian asks, regarding jurisdictional issues, if two companies reside outside of the U.S., what kind of remedies could an outside country apply? Is it different to local companies? Generally speaking, they control their own sovereign jurisdiction, right? So they would say, you have to comply with our laws or else you cannot sell your product or service within our borders for the most part. And if you choose to, then we start to have fines. Then we start to have other things that can get into our bag of remedies, as it were. But most people are not going to just ignore a U.S. regulatory body and say, no, we're just going to do it anyway. Come after us, bro. So realistically, those are the controls that they have. They can't unwind the company. They can't prevent you from actually doing the transaction on a real legal basis, because that's all happening within the jurisdiction of Japan. But they can prevent you from participating in the marketplace here in the way that you would prefer to. Rambling Entertain says, does Sony closing Funimation and users losing digital products affect the CMA stepping in? Same kind of answer, which is to say, I still think we're probably too kind of focused on a small section of entertainment, and that most government bodies are not going to be interested in setting their foot in on this particular issue. And the CMA might be chastened already from the way the Activision deal went for them, but I don't think that that's very likely. I also don't think it's impossible. Gintlestone? If Kadokawa takes stock in lieu of cash, they are betting on Sony's success in the future, no? Yes. In general, if you are taking equity in your acquirer, you are betting on both the company's success that's buying you in the future and also kind of the synergies, to use some business parlance, or the value of the two combined entities being improved over the value of them separately in a way that can make sense, but it is inherently less valuable than cash in your hand. It's like the hamburger tomorrow versus the hamburger today. And so those prices go up. The one thing I tell clients, I tell people that are all negotiating deals like this, is that whenever you make somebody more uncomfortable, whenever you ask something of them, the overall price goes up. So if you need more protection on the representations and warranties, expect to pay a little bit more. If you want to pay in something other than cash, expect to pay a little bit more. And if that asset is something that they intrinsically don't value, expect to pay a lot more. So if you can convince them that Sony's great, first of all, the lawyers have to write much longer documents because everybody has to give reps and warranties to each other on a deal like that. But if you can convince the other side that Sony is great, then maybe you don't have to pay that much more than all cash. And that might be good for Sony. That might work for them perfectly fine. We don't know because we're not in the room of that particular conversation. But I did want to express that it is different to pay in some combination of assets rather than just cash. Painful Discourse asks, does FromSoft has a day in this? They signaled they are not interested in exclusives, and Sony excluding to a point Bungie is not known for shearing properties or being consumer fail-lacing. I did my best, Painful Discourse, but does FromSoft have a say in this, I believe is the question. No, not broadly. So FromSoft sold itself to Kadokawa, Sony, and Tencent. So that consortium controls what it has a say in, what it does. Sony obviously is not going to be unhappy with Sony. Tencent, we talked about having potentially conflicts all over the place as to whether or not it would want to proceed with a transaction, whether it would want to get out of this investment potentially. There's all sorts of things that could happen behind the scenes there. And so FromSoft doesn't have an individual say, but the actual people that make things at FromSoft certainly could say, if you try to make this exclusive, if you try to do things that we disagree with, then I'm not going to want to make products for you anymore. And when we talk about things like Miyazaki in that particular context, that's what you have to worry about, right? If there's a specific amount of value that you can ascribe to a specific person in the company, you have to make that person happy. And that's completely separate from the legal question. That's completely separate from the kind of corporate transaction issues, but it's still important if you're thinking about getting value out of that asset that you just purchased. Googleman81 says, given the cultural background of both companies, would it be feasible to assume the possibility of some kind of special agreement between the two? Yeah, we would usually consider that a strategic deal rather than a financial one. When we looked at the Wikipedia entry for Kadokawa and Tencent's involvement with it, that 6% that it bought, it mentioned that strategic component, right? So a lot of companies will invest in another company to participate in that company's upside, but also to kind of get them in the door for agreeing to some kind of strategic relationship with the company. So Sony and FromSoft, Sony and Kadokawa could agree to a strategic deal as part of this. That would usually be an investment concept, not an acquisition one. And Sony already owns 2%. So this could be back down to essentially an increase in their investment rather than an acquisition. But yes, absolutely. There's all sorts of deals that can be made. But to the extent that that impacts the financial or other situation of Kadokawa as a publicly traded company on their own, they would have to reveal that to the public markets. So if that were to happen, it wouldn't likely be super secret unless it really wasn't material, wasn't important. So if they did that, then that would be something that we would know about long term. Hargeet Shani says, question, with the Disney-Fox merger leaving a bad taste, will the combined Sony Pictures, Columbia, Aniplex, etc. cause regulators to look at them adding more studios? Well, Disney-Fox did go through the regulatory review process. We actually saw the FTC move against that and demand some removals of certain of the assets. It's possible. Again, I don't want to sit here and tell you that it's impossible that some regulator could say, you can buy Kadokawa, but you have to divest of the anime assets. I just don't see it as extraordinarily likely, even with Disney Fox, even with Sony, Columbia, and all the other combinations of studios that we're seeing around entertainment. I'm not feeling like there's a lot of appetite for stepping in on entertainment questions, especially after Microsoft ABK and what happened with the various regulators in that particular context. Anime compilations. Hoeg, so I'm going to lose access to FromSoft games because of the Sony region lock. You mean because Sony requires a PlayStation Network account and doesn't provide PlayStation Network access to all the jurisdictions around the world? It's possible. Again, I don't want to tell you that it's not. I think that would be shooting themselves in the foot if I were Sony. But I've thought that a long time for the PlayStation Network, and I think that they should make sure to extend that network to all the jurisdictions in which they would like to sell video games. So I think more likely, if you want to have a positive spin on this, if Sony were to take over FromSoft and they want to sell FromSoft games through their PlayStation Network, then you might see an emphasis on making sure that they extend the technological capabilities of that network to these jurisdictions that don't otherwise have it right now. So I like to be an optimist. I like to be positive on these things. I'd like to think that Sony would take this as a moment in time, an inflection point to expand the PlayStation Network access rather than to just have FromSoft games not be available in all these different jurisdictions. But again, I don't think it's likely that they would make them exclusive to Sony in any event. So there's your answer. Alonzo V says, it wouldn't surprise me if we saw FromSoft announcing their independence in the upcoming days. Well, that's a part of this as well. I don't think they likely have enough money to buy themselves out, and they have major players that they would have to buy themselves out from, Kadokawa, Sony, and Tencent. So I think that's unlikely, but it wouldn't surprise if the creative forces at FromSoft went public and said they don't want to be controlled by places like Sony, like we just were talking about with respect to Miyazaki. So I don't think that's impossible. I don't think they have the financing to just buy themselves out, but I also don't know what kind of potential financing sources they have. So management and the people at these companies have bought themselves out before. We've seen that in video gaming to a great extent, of companies going independent after they were purchased by a giant parent company. But it's a unique set of circumstances, and you really do need to have a financial backer to make that happen. All right. Well, I already said goodbye earlier because I didn't know whether you all would have any questions, but I thought those were good questions. I hope they were informative. I hope this whole video and series on virtual legality is informative, and I hope you do share it around with people that might otherwise be informed by a conversation like this one. And good luck to everybody involved in the transaction. Good luck to all the regulators that are going to have to review it if it goes through. And thank you so much for being here in virtual legality. I will see you on the next episode, whenever that might be. Thank you again so much.
Virtual Legality is a YouTube video series with audio podcast versions presented as commentary and for education and entertainment purposes only. It does not constitute legal advice and does not create an attorney-client relationship. If you have legal questions about the topics discussed, please consult your own legal counsel.